Good evening. This is Brian Stoll for timingstrategies.com. Come check out our website again, timingstrategies.com, for the day of October 16th, 2007. Today we got the price we were looking for on the spiders. We came back down to that 21 bar average, right into where we're looking at as support. I think, and this is my thinking again, doesn't mean that's what's going to happen, but we should see one more stab lower. Below today's low. We got a gap up opening tomorrow, more than likely, based on Intel's news. Everything's trading up after market, 20 points almost on the NASDAQ futures. But if we get a stab low, we get a gap open higher, we come back down, take out today's low and that low back at 153.43 one last time, and then head back up. Definitely be a buyer. If that happens, we're going to be closing our intraday short positions below. As soon as that happens, when it trades back above the positive sign, if that happens, if we even get that much luck, we will be getting long. Our end-of-day system with Ridex will also be closing our short positions and putting on approximately a 30 to 60% long position at that point. The probabilities and possibilities for this market to just trade back and forth, kind of in a diagonal zigzag pattern above that threshold, over and over again, is very, very likely, in my opinion, until we get something that really is decisive. Just working the orders, getting a lot of people backed up and screwed up. The other point I want to bring in is the Qs, because we got a lot of volume here. If you want to take a look down here in this area, 1, 2, 3, 4 days of volume with the Qs basically going nowhere. All right, we got that gap underneath us that everybody's looking at, and again, 4 days of heavy volume like we've got down here without really much price movement to the upside, just above a gap like that, to me is churning. If we get a takeout of that low tomorrow, my estimation is that the NASDAQ is going to start losing its leadership. With that in mind, I'm also looking to put on a short position with the real estate and the financial industry. This is a ETF, the IYR. Looking for a bounce sometime tomorrow. I mean, I'm happy to short that thing almost anywhere, but to be strategic, if we get a bounce tomorrow, maybe sell it on the open if there's a gap higher. If we take out that highs and come back up to that 21 bar average, and we get back below it again, you can short the IYR, or you can use the SRS, which is a neat little ETF that is a 2 beta negative, and again, you don't take quite as much money. And you get a little more capital to work with. Another position that we're looking at is the XLF. Pretty much the same thing as the ETF, the banking, the real estate, the finance, the debt, the garbage, the Wall Street, the Smith Barneys of the world, the Citigroups, you name it. This is their abortion, and it's going to keep getting worse, uglier. So if we get a trade back up above to that high and then we trade back low, I'm going to be real happy to short that. In fact, I'm not going to just short that. I'm going to buy this ETF, which is a negatively correlated ETF, the SKF, and again, it plays a 2 beta inverse relationship to the financials, which, being the XLF, is what we're trying to get short. Another interesting position that we're looking at presently is potentially a short, believe it or not, on the XLB, which is the materials index. We've got that break below that high, and we've got a 2-day close below there. Significant, yeah, it looks very similar to the market and everything else, but for some reason that just strikes me as it's going to want to go lower. I don't know why. I mean, it's hard to really believe that with the weak dollar, as far as everything priced in dollars on a materials basis should be going higher. But if you want to take a little look at potentially shorting that, you can use this one, SMN. It's a negative 2 beta ETF on the materials position. It's not that liquid yet, but I still like it because I don't have to use as much money to get short exactly what we're looking at here. But again, back to the weak dollar. If you haven't heard it yet here, you're going to get to hear it again now, and that is the price of oil is almost $88 a day here. Don't let Larry Kudlow and his gang tell you that a weak dollar is wonderful for everybody. Okay, a weak dollar, a worthless dollar is what it's now becoming, is not good for everyone. It's actually bad for everyone. It's only good for a couple of people that are benefiting, or a couple of large multinational corporations, or a couple of banks, because they get to deflate or basically inflate away their debt. So again, $88 a barrel oil, not a happy meal. It's not because of what you're hearing about Turkestan or Turkey or the horrible Iranians or the Middle Easterns. Again, they pulled that garbage out back in the late 70s, early 80s, and said that OPEC was making an oil embargo, okay, and that's why we had the gas lines and everything. Baloney, okay? It's just the hack media and hack Washington and hack Wall Street looking for somebody to point the blame at for the problem of their own creation, and that is a worthless dollar. All right, OPEC embargoed back in the late 70s and early 80s, not against selling us oil, but because we were giving them worthless cocktail napkins with a bunch of zeros on them, trying to call it money, and they were giving us real stuff, real oil. All right, so again, $88 a barrel. I don't want to harp on it, but I will again, I'm sure, in my next market commentary. So that's the bottom line. If anybody has any questions, please check out our website, timingstrategies.com. Send us an email. Look forward to hearing from you. You can give us a phone call as well. I appreciate your feedback. Again, this is Brian for timingstrategies.com, Tuesday, October 16th, 2007.